Welcome to Tradier's Rundown. I'm Jim Burio. That's Bob Iacino. We together are the hosts, Tradier's The Trader's Edge, which comes at you live at 3 o'clock on Wednesdays, Chicago time. It's always weird laughing because we're right in the middle of a heated discussion every time that the curtain goes down and we have to come on. So it's kind of always funny. It's our little joke. Bobby, today we're supposed to talk about gold. Before we talk about the fundamentals back in gold, which this is something that you and I have been talking about for several years, and we're both like, we're not gold bugs. We're just, we're just the fundamental case supports it. But let's talk about the hierarchy of how people trade gold and the best ways to be invested in gold. What's your thoughts?
So I actually agree with the rundown here. I don't have any different sort of view than what's listed in the rundown. The rundown says the most obvious and most direct way to own gold is to own actual gold. So you can buy bars and coins at several different places. Pretty soon we might actually have a recommended place, but I'm not going to talk about that right now. Cool. And it's just you have the gold in your hands. So in sort of gold's worst case scenario value, everything goes to hell. You have it in your hands. You could trade it for something.
Can I add something to owning it physically too? Because in the rundown it says, it is cumbersome to own physical gold because you have to be concerned about it. But it's also gangster as hell, by the way. And you feel pretty cool when you have your gold and you're counting up. It really is. Anyway, did not mean to interrupt.
Well, no, it's different too, because like at current prices, which I don't even know where gold is sitting right now, around
23.30.
Yeah, 23.16 is the last print on the futures. So even at that, you're talking about 5 ounces of gold being over 10 grand. A coin is an ounce. You're talking about 5 coins. So yeah, it's cumbersome. If you want to hold $1 million of gold, that's a lot of coins and a lot of bars. But, walking around money where you're going to go after an apocalypse and kind of, go get yourself a goat, you can probably do it with a couple of gold coins. Now, the second way the rundown provides, and again, I agree with this, is CME's gold contract, the gold futures contract. Also, it is deliverable. So if you want to actually hold the futures to get gold delivered, it's a complicated process. I wouldn't recommend it. I would recommend rolling and then just exiting and take your cash and then take that cash and go to an actual gold dealer. But you can get physical delivery. And then they got exchange traded funds, exchange traded notes. GLD is probably the most well-known and liquid one. That would be the ETF way to do it. But there's some negatives to that I don't really feel like going into.
No, because they don't have as much gold as they.
Yeah, they don't hold the gold they represent.
Yeah, that's so basically. I view it more as a trading vehicle, which I like trading it, but it's not my Armageddon play. I mean, I'm hoping that the gold and the Bitcoin will suffice for that. So let's talk about the fundamental thesis that's still propping gold up. What are their top 3 things and what's pushing gold higher?
Well, number one for me, it's unfought inflation. Okay, and what I mean by that is we saw a couple of central bank speakers this week basically agreeing with Powell, but not really, but none of them saying they were going to hike anymore. And, I believe we're reflating. So I believe inflation is going to start to climb, not scream higher, but climb higher. And because of that, assets like land and stocks and gold will likely climb higher as well. Another one that's probably 1A or 1B, whatever you want to call it, central bank buying. Largest in the last first quarter of this year, largest on record, central bank buying, according to the World Gold Council. So that's a big one as well. I mean, I don't think they're necessarily getting ready to back their currencies or anything, but they're accumulating gold. And then there's this little tiny bit of moving away from the dollar with the BRICS and things like that that are buying gold as well. And then lastly, I think is some sort of global catastrophe. I still think that's the last one, but it's probably most valid now as it has been maybe since, I don't know, the missile crisis.
Right. I agree with you on that. The one thing I would add to it is that, and I've said this many, many times, I agree with Brent Johnson of Santiago Capital that I don't think the world is de-dollarizing.
Right.
I think
I agree with that, by the way.
And it's an empty threat. However, if enough people think that it's possible, that is another serious tailwind to the gold trade. I'm not trying to figure out what's going to happen. I'm trying to figure out which direction prices are going to go. I am trying to figure out what's going to happen too, but that's from a trading thesis. That has been one thing that has fueled my gold trade. I've been big in it. Basically, I'm just saying that I don't have much trust in the stewardship of fiat currencies, particularly our fiat currency. Therefore, I want to own stuff that's denominated in dollars. And I own it physically. I own it in a lot of different ways. And I'm very comfortable with that position. Agreed?
Totally agree. In the past, I've said things like people shouldn't have more than 5 or 10% of their portfolio in gold. I think it's more than that now. I would go 20, 30 personally. I mean, I'm not a financial advisor. Don't take my advice. Also, speaking of financial advisors, 2 more things I want to mention. One is in the rundown, that you can trade gold and hold gold in your IRA. In a self-directed IRA, you can hold gold. The IRS allows you to trade gold futures in an IRA. But again, we're not accountants. We're not financial advisors. So double check the way that it applies and if you have the right IRA for that. Also, people ought to Google, or actually I say DuckDuckGo, don't use Google, but people ought to look into where gold comes from. I mean, it's literally an original element from stars that were dying that came down to the earth on meteors. So Bitcoin people, and they're right about this, talk about part of the value of Bitcoin being that it's limited in supply. No matter where that limit is, so is gold. Yeah. I mean, they're not making any more. Not a lot of stars dying, shooting blocks of meteorites with gold in it down here. So gold is limited as well. We just don't know where that limit is, right?
All right. Great point. This has been Tradier's Rundown. I'm Jim Uriel. That's Bob Iacchino. Please join us in Tradier's The Trader's Edge, 3 p.m. live Chicago time, Wednesday afternoons. Thanks, you guys.
All opinions expressed by Tradier Hub contributors are solely the contributors' opinions and do not reflect the opinions of Tradier nor its affiliates and or subsidiaries. You should not treat any opinion expressed by Hub contributors as a specific inducement to make a particular investment or to follow a particular strategy, but only as an expression of their opinion. The contributors' opinions are based on their own personal research, but neither Tradier nor its affiliates and or subsidiaries warrants its completeness or accuracy, and it should not be relied upon as such. Any trades or positions discussed or referred to by contributors may or may not be actual live trades or positions. Such information is not intended to be financial or investment advice. Tradier Inc. is the parent company of Tradier Brokerage Inc. Tradier Brokerage Inc. and Tradier Inc. are separate entities with their own products and services. Securities products and services are offered through Tradier Brokerage Inc. Tradier Brokerage Inc. is an independent subsidiary of Tradier Inc., all rights reserved, member FINRA SIPC.